Good day, AVZ Traders. I trust you are well. Welcome to broadcast number 44. Now, yesterday was a U.S. public holiday. Banks were closed. Markets, New York Stock Exchange was open. Low liquidity, irregular volatility, things that you got to watch out for when the U.S. banks are closed. Now, let's have a look at what took place on Dow Jones 30. This was the price action during the day. I didn't trade the US session, because whenever US banks are closed, I do not trade in the market for reasons mentioned above. But this is what we had for the morning trading range behavior beneath the high of yesterday. Now, this candle here, that candle there, let me move that away. That's something hanging over there from Zoom. That candle there was the first breakout, first candle, one candle before US open. That was the first breakout. Did not become a large breakout trend candle. So immediately you rule out strategy number one, because now you're going into the open. And of course, when you go into the open, the strategy number one at the open, if the bulls had given us a big bull breakout trend candle closed on its high, right above there, 3/4 above that, we could say, okay, strategy number one at the open, jump in and let's see what we do. But we did not get that bull doji first candle US open, a failed breakout above the high of yesterday, which was here. But also, it is a failed breakout above the high of today, although the bulls went above it. Tail on top is a problem for the bulls. Now, when you see that kind of doji, just wait for the first candle measured move breakout, which was here. First candle, measured move breakout, just to observe what takes place throughout the, because if you take any entry, you do not have one times risk reward to that hidden level of resistance, which is absolutely key. Any first candle level measured move breakout is a key level of resistance. So observe and see what happens. As you can see, just kind of put brackets here, gradual bull trend, the market is staying above the 10 EMA all the way to the first candle measured move breakout. Bulls tried to break out above that, failed, and this became a test of the 10 EMA. So we have a bull breakout test from test of 10 EMA. There is a test of the 10 EMA bull breakout test, 10 EMA test. The market is gradually going up. So you are into what strategy, guys? You got it. Strategy number two, gradual bull trend. We did not get strategy number one at the open, but that is a bull trend staying above the 10 EMA. So you buy the breakout above the high of today. So buy this beautiful candle closing on its high, buy its breakout, which is above the high of today, breakout of the trend candle itself. Or if you don't want that, because I'm not happy with that, wait for the follow through and buy the breakout of the follow through. Now, if you bought here the breakout of the test of the EMA, that would be your entry. Measured move is here. So after you are into the trade, you remove half the risk to beneath the candle. So first entry, if you're buying above the bull breakout trend candle, there is a measured move stop. That's where your stop goes to. Just plonk it just beneath the low of high of yesterday. If you have taken the second candle, of course, it's a different structure. There is midpoint. Your stop is to be beneath this higher low, just here. Okay. Into the trade, remove half the risk. Don't float it. So half the risk will be beneath that candle. So second entry, if you're buying above the follow-through breakout trend candle using a measured move stop. No point to put tight stops and get stopped out more often. That would be absolutely fantastic above its breakout. Had you taken that trade, of course, you don't go and take that at all. Okay, you wait. And on this particular entry, one times risk reward, first entry, one times risk reward profit target will have been rewarded nicely. Had you taken the follow-through and higher probability with a stop beneath here, you would have had to, you would have got your second entry, one time risk or profit target up there. So if you had stayed into the market, fantastic. Now, the reason for showing you this is because, guys, the market presents these structures at any time. This could have been at the open of the Asian session. And of course, key exchange, could have been the open of Tokyo, could have been any market when Tokyo opens, and you'd have gotten this structure. This is how you would have traded. It could have happened at the open of London, and this could have been cable currency, pound, doing this from the open of the market. That's how you'd have traded. It could have happened at any time of any day. That's the beauty of the AVZ libraries, videos in the library, the coaching resources. When you go and study them, you are not necessarily studying what happens only at the US Open. It does not work like that. These patterns can occur at any time, so you're preparing your mind. If I see this taking place during the time I'm in the market, this is how I trade it. So go through these coaching resources over and over and over and over again. All right, guys, name is Dr. George Nyabatsa. I shall catch up with you again. Happy to present to you this video broadcast number 44. We shall catch up again. Take care and bye-bye.